Ladies and gentlemen, good day and welcome to the Q4 FY22 earnings conference call of Eldeco Housing and Industries Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Kanav Khanna. Thank you, and over to you, Mr. Khanna.
Thank you. Good afternoon to all the participants on this call. Before we proceed to the call, let me remind you that the discussion may contain forward-looking statements that may involve known or unknown risks, uncertainties, and other factors. It must be viewed in conjunction with our business risks that could cause future result, performance, or achievement to differ significantly from what is expressed and implied by such forward-looking statements. Please note that we have mailed the results and the presentation, and the same are also available on company's website. Should you need any assistance to receive them, you can write to us, and we'll be happy to send it over. Now, to take us through the results and answer all your questions today, we have the top management of Eldeco Housing and Industries Limited, represented by Mr. Pankaj Bajaj, Chairman and Managing Director, Mr. Manish Jaiswal, Group COO, Mr. Sushil Gupta, President, Finance, Accounts and Taxation. We will start the call with a brief overview of the quarter gone past and the year gone past, and then conduct Q&A. With that said, I will now hand over the call to Mr. Pankaj Bajaj. Over to you, sir.
Thanks, Kanav. Good afternoon, everyone. I welcome all the participants to Eldeco Housing and Industries Limited's Q4 FY22 earnings call. We had a lot of positives coming our way in the financial year 2022. The demand for residential real estate has come back all over the country after years of stagnation. We have recorded our highest ever bookings in the financial year of rupees 265 crores in FY22. This was about 180% higher than last year's booking of rupees 95 crores. In volume terms, this translates to 7 lakh square feet area booked in FY22 against 2.5 lakh square feet in FY21, translating to a growth of over 175%. In collection terms as well, we ended up registering a record collection of rupees 156 crores in FY22 versus rupees 128 crores in FY21. A growth of 18% year on year. For any industry to grow, both demand and supply have to grow in tandem. We have now come out of a long period of stagnation in demand of housing in the country. This demand is only expected to grow in the coming years due to a confluence of factors like affordable real estate prices, reasonable rates of interest, growth in jobs and urbanization, and also years of pent-up demand. However, in the short term, there are challenges on the supply front. Tying up new projects and getting approval for them in order to meet the demand is a complex process. Compared to low demand, this is a good problem to have, and we are confident of overcoming this problem. We have recently acquired about 20 acres of fresh land to be launched as Imperial Phase 2. If you remember, we have already launched Imperial Phase 1, which got a great response last year. Our foray into the Bareilly market has also turned out to be a great success, and we are looking at selectively following up on that. We are constantly looking for opportunities to add new projects. As of now, we are free from bank debt, which gives us ample headroom to raise debt funding should there be a need. I thank our shareholders for their trust and support. We believe in sharing the wealth we have created with our shareholders. For this reason, and towards a consistent dividend policy, we have declared a dividend of rupees 8 per share. This translates to a payout of over 15% of our annual profit. As you all must be aware, we have got the shares of the company listed on NSE recently. With this, our shareholders get an additional platform to trade the shares of the company in addition to the BSE. In the end, I would like to state that the coming years look good for real estate development industry. We hope to take advantage of these opportunities with the same steadfast commitment to financial prudence and to corporate governance that we have shown in the past. With that, I would like to open the floor to Q&A.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Augusta Dave from CAO Capital. Please go ahead.
Thank you very much, ma'am. Thank you, Pankaj, for the opportunity, and congratulations on great performance again. Mr. Bajaj, I have a few questions. The first one is a clarification on the statement, on the comments that you have put on the presentation. Sir, in that you have mentioned that, so I'll just repeat part of it. You're saying, therefore, in spite of strong demand environment, we may not see... No, hang on. Many micro markets, including Lucknow, are out of inventory and fresh supply in terms of launchable new projects is low. Therefore, in spite of strong demand environment, we may not see major expansions in sales in the coming quarters. So is this a general statement for the industry, or is it a statement about our company?
Both, Augusta.
Right.
And it is since we are present in many markets and we also know what's going on in the industry.
Right.
So most micro markets are out of inventory as of now. So there is as you know, that supply takes in our business takes some time to, it comes with a lag.
Right, sir.
So that I think for the next couple of quarters, we are looking at that lag period before supply responds to the sudden increase in demand.
So the 2-quarter number that you have just mentioned, is that an indicative number or a specific number again that you have in mind based on the things that...
No, it's an indicative number because supply depends on our being able to tie up the land, and that's specifically special to Eldeco and for other micro markets for other players also. So not only do you have to tie up the land, and you also have to tie up the approvals. You know, real estate approvals are a complex process. So it's only an indicative timeline that's how long it will take for supply to respond. And so suddenly if we are out of inventory, we can't start, selling tomorrow with a new product. It takes time. So our assessment is that it will take a couple of quarters. If there was demand today, it's a little bit like the car market today. There's a lot of demand, but there's no chip supply, isn't it? So it takes some time to respond. So similarly, the inventory situation in real estate industry, especially Lucknow and other markets also, has completely turned on its head in the last 1 year, and we are out of inventory. So are all the other good developers. But I'm sure supply is going to catch up, and our assessment is that it's going to take a couple of quarters for that.
Mr. Bajaj, then logic would dictate that something will happen on the price side. So are you seeing a situation where prices will continue to increase till the supply situation sorts itself out? Because you are also mentioning that the demand is here to stay in spite of higher inflation, higher prices, and also higher interest rates, presumably going forward. So would you expect more price hikes happening in the property market, better realizations while the supply sorts itself out?
So the last 1 year, we've already seen significant price hikes. And if you look at, I think we declared it in our presentation, our average realizations have been going up. This quarter, they look a little low because there's some institutional plots we sold, some school plots or something, which are sold at a lower rate. If you exclude that, actually our number is 10% higher than the last quarter, average realization. So historically, in the Lucknow market, we were selling at about 3,500 rupees a square foot, 3,600 rupees a square foot. That has reached up to 4,500 to 4,700 rupees a square foot.
Sure.
It is like a 55% jump in 1 year. And in a supply-constrained environment, this is going to continue to happen. That's what the logic says. But the only caveat, and which is not a micro market thing, it's a macro thing. The only caveat is that inflation in the overall economy is also going up.
Mm-hmm.
So if the inflation is going up, and if people's wages do not go up by that extent, then will they continue to have the buying power to support higher prices? One does not know. So it all depends on how long this demand continues. As of now, it looks like it is going to stay, and prices in the short term are going to see another round of increases.
So in your mind, what would be the tipping point? What level? So the number that I have of average realization was 42.30 for the last quarter, and you're saying that it's closer to 4,500 now.
Yeah.
Excluding the land sales that you mentioned. So at what price do you think you will get worried with the possibility of demand destruction? Either a price level or probably an interest rate level, or some other factor. What is something that will worry you in terms of demand?
Okay. So you're asking me to say a number, and I'm going to say it because that's what my assessment is. I think it will be another 15 to 20% from now. I think that will be still all right, and I'll give you the reason for that. If you look at the CAGR of property prices in the country over the last 10 years, it's still comfortable. Whereas our prices they've not doubled from, say, 2012. We were stagnant for a period of almost 8 to 10 years, and some increases happened in the last 1 year. So even if we were to increase the prices and people's incomes have actually doubled or more than doubled in the last 10 years. So that ratio is still comfortable. So I think we still have another 15-20% to go before I start getting worried that the market is overheated and demand is not going to support these prices. I don't think we're at that territory yet.
And so in terms of interest rates, is there a number beyond which you start seeing problems?
Funnily enough, in my 25-year career, I have not seen property sales to be very sensitive to interest rate fluctuations. Mr. Deepak Parekh also went on record to say that. Mr. K.K. Mistry also said the same thing. Because the thing is, interest rates are not fixed in India anymore. Home loan rates, home mortgage rates, they are floating rates. So if if today they're low, tomorrow they can be less. So I don't think families really make the decision by today's rates of interest. It can have some influence on that, but they know that over a 20-year period, they will fluctuate hopefully in a range of, say, 6.5% to 8%, and families are all right with that. But if suddenly rates of interest go from, I'm talking about home loan rates in India, if they go to 9%, I would be worried. I don't think they're going to go to 9%. Right now, they are hovering around, in spite of the recent increase, they're hovering around 7%.
Right, sir.
Yeah. So I don't think we're in different territory there.
Right, sir. So I have a few other questions, but I'll go back in the queue, sir. Thank you.
Thank you. The next question is from the line of Varshit Shah from Veto Capital. Please go ahead.
Thanks for the opportunity and congratulations, Mr. Bajaj, for a good set of numbers. So my first question is on the overall inflation. I think we are constantly hearing cement prices going up, steel prices going up. Now with this realization also going up, so is there a net expansion in margin at this point as we see for at least incremental construction which we are going to do, or is it more like covers the inflation cost, margins largely remain same?
There's a net expansion in margin.
There's a net expansion. Okay.
Yeah, and I'll tell you the reason. Let me explain that a little bit. So out of your overall top line, construction cost is about 40-50%. Your land cost is 20-30%. Balance is your other expenditures and your gross value added, your profit. So if your construction cost, which is, so if I'm selling stuff worth 100 rupees, and my construction cost is 40-50 rupees, that goes up by, say, 20%. So my cost goes up by 8 rupees, but my sale value has gone up from 100 to 120. My other things have also gone up. So there's a net, if you look at even our numbers, overall there is actually an increase in our margin. Whether going forward the price is going to, we are going to be able to keep passing on the increase in construction costs, so we'll see that. But as of now, in the last 1 year, there has been an expansion in margins.
Sure. So a question connected to this, sir. We are based out of Bombay. And in Bombay, some of the extremely low-end developers, I would call it, not the organized ones or the companies of your size, but the low-end developers who were doing a very small affordable housing kind of thing, they are actually facing pressure on the margins. So even in the markets which we operate, not for our projects, but at least in the low end of the segment, the pressure will be much higher because they are not able to price it the way, let's say, an Eldeco would be able to price it. So they are getting more squeezed out from the market. Is that assessment also true for your markets?
It's not true for Eldeco specifically. The reason being that if you look at our margins, they are on the higher side. In fact, they're very high as far as the industry is concerned. But if you're playing in the affordable segment, your construction cost as a component of, as a proportion of your overall sale is as much as 70 to 80%. Now, if your construction cost increases by 20% or 25%, which it has in the last 1 year, then definitely your margin are under pressure. In fact, you could not even be breaking even. But in our case, our construction cost is just 40% of our overall sale value. So even if it increases by 20%, it's not, and we're able to pass that on to the customer. It's not affecting us. So yes, you're right that in the lower end of the market, the increase in costs, input cost is a bigger cause of concern. For Eldeco, it is not.
So just attention to that. So do you see maybe an opportunity over a medium term, not immediate quarter or so, but to kind of premiumize that space a bit in some form, not exactly the products which you are selling currently, so that you can kind of push out some of the smaller players gradually outside, because you will be able to charge a premium slightly on your brand name and recover those costs, while those players can't. So do you see an opportunity of a new segment emerging over a medium term, or is it too early to call?
I didn't understand the question. If you can explain that.
Yeah. So let me rephrase this again. Because of this low end of the market is facing some problem, maybe Eldeco can come up with a separate segment where they can charge a slightly better premium than the market in that low end segment, and still make a decent IRR on those projects. So do you see a new segment where probably there could be an emerging opportunity for Eldeco over medium term, not immediate?
No, I feel there's a contradiction there. If you're entering the low end of the market and charging a premium, then you're no longer lower end there. So we are in the middle end. So we are very clear as to what our corporate strategy is and which segment we play in, and we've always been in that. We are not an affordable housing developer. We don't want to be, because we were always cognizant of this. The sudden impact in input costs could completely make your calculations go awry, which is what has happened. It was not unexpected. A bout of inflation was bound to come sometime in the construction cycle, and we don't want to play a thin margin game. Where we want to be is that we do housing which starts off as middle income but has elements of premiumness in it, so that by the time it ends, it is fetching a premium, and which also enables us to pass on any mid-cycle increase in construction cost to our customers. That's where we want to be. We don't want to go down the lower end of the market, because the margins there are too thin. That has always been a problem with affordable housing in India. That what do you do with a sudden increase in construction costs? And whoever is the players are in this segment are right now facing the heat. Frankly, we have been able to sail through with it, because we've been able to pass it on to our customers, and they're willing to support a higher price. So to answer your question specifically, we don't want to go down the affordability ladder to a more affordable range of products.
Sure, understood. And sir, another question is, any plans to merge the two entities of ours?
So, frankly, we can't report it officially, but we keep deliberating upon it. There are complications there. Whenever we have something to announce, we will announce there. But it's not a foregone conclusion that it will happen. But at the same time, we are looking at ways how we can expand at least Eldeco Housing's footprint, so that company continues to have enough growth runway. I mean, it should not be that it's not expanding in Lucknow, it's not expanding anywhere else also. That we will ensure that it has enough growth runway. So last couple of years have been good for us, and we hope that we keep feeding the project pipeline with enough projects so that it can continue to grow. The merger with the private entity is one way of doing it, but there are other ways of doing it as well.
Sure. So if I could just squeeze in one more. So we, apart from our traditional stronghold markets of Lucknow, Bareilly, etc., is there any other markets which you believe that probably we should look at it from a medium-term perspective, or maybe at the board level for the North India market? Because I think I see a lot of gaps in a lot of cities for developers like us to go and tap those markets. Maybe you have to spend some money on brand building out there, maybe one or two good projects in those cities. So any such other areas or cities which you have in mind from a 3 to 5 year perspective for people who want to stick around with the company for 4 or 5 years?
Yes, this company is looking at other cities as well. And in fact, we have entered into some preliminary kind of agreement for a premium stroke luxury development in Rishikesh, in an area near Rishikesh called Narendra Nagar. And that is for luxury second homes. And the target segment will be HNIs all over North India, because the Eldeco group is present in a number of cities and we have a catchment area which is quite large. So we have already, just like we did a experimental project in Bareilly which did very well. So we have taken some small foothold in the Narendra Nagar stroke Rishikesh market. Apart from that, we are looking at other areas as well.
Sure. And sir, any particular investment plans for the next 2-3 years, in terms of tying up or tying up lands or acquisition of land, etc., which you have in mind, a high level figure or a high level range?
So in our presentation, we already announced 20 acres that we bought recently in Imperial Phase 2. There are similar land parcels which we hope that we should be able to announce soon in the coming quarters. So there will be something in the coming quarter, but since it is not tied up, I would not like to make a premature announcement.
Sure. I'll get back in the queue. Thank you so much.
Thank you. The next question is from the line of Priyank Gupta from Guardian Advisors. Please go ahead.
Congratulations to the management on outstanding results, and it's heartening to hear very positive commentary. My question is what actually Pankaj was just telling us about the land which has been acquired in the current year, 22 acres. If you can throw some light on it as to how it will be monetized in next few quarters.
So this land, Priyank, is adjacent to Imperial Phase 1, which is a project which we sold out in a matter of a couple of days. I think it was in Q3 of FY22. So that the market is already well established and our prices have risen there. We have been assembling land adjacent to that, and we've been able to get 22 acres of contiguous land. The approval process is going to take another couple of quarters, and then we are going to launch it. The product profile and mix is going to be similar to Imperial Phase 1.
And in addition to what you said about Rishikesh and other markets, do you have any other options of expanding any other existing projects like Imperial?
So we have a number of those, but as I said that till we do not have a definitive agreement, it would not be realistic. A number of deals fall through. So I don't want to announce something which we do not at least have a definitive agreement on. Hopefully in the next Concall we should be able to announce something.
Thank you so much. Best wishes. Thank you.
Thank you. The next question is from the line of Jatin Kumar from Alpha Capital. Please go ahead.
Hello, sir. Congrats for a good set of numbers. Sir, I'm just looking at your PPT and I'm looking at this ongoing projects. So in this ongoing projects, we are saying that the value of area booked is 428 crores. So out of this 428 crore, can I say that about as in FY22 we have reported we have booked 265 crores. So out of this 428, probably 260 odd crore was booked in this year, and rest of that was booked in the previous year. Is that a right assumption?
Yeah, that's right.
Sure, sir. And as in our revenue is quite low in this year compared to this area booked. Now, if I see we have couple of projects that are going to complete in June as well as December as well as September of this year. So can we say that our revenue will increase as these areas will get completed and handed over to customers? While even if we don't start new things, our revenue will go up in these coming quarters.
That's right, except if you're looking at the presentation, if you look at row number 15, Eldeco City at Bareilly, where we have declared that we have 40% beneficial interest. So that entire revenue is not going to get consolidated in the revenue of Eldeco Housing because it's 40%, it's not more than 50%. But the income is going to come as bottom line. So that revenue is not going to get recognized as Eldeco Housing revenue. Your question is about revenue recognition, but the profit is going to get recognized. But rest of the unbooked or the value which has not been booked in the profit and loss account, but at some stage, as and when these projects get completed, they will start getting booked.
Sure, sir. And as in, there are 3 projects which are going to complete in June only, Eldeco Laksa as well as City Dream. So they are running on schedule?
Yes, they are running on schedule.
Sure, sir. And we have a lot of projects which are already ongoing as well as forthcoming. But you were also talking about inventory issues. So is that going to affect us in a big way, the inventory issues, or we have enough projects already coming in or forthcoming to take us out?
So the forthcoming projects are those we define as those where we have not received RERA approval for some reason or the other. Either there are some precedent approvals which are not received, and one it takes time. Some are under planning. So some of these may not get launched in the immediate quarter or the quarter after that. There could be, I fear that there could be low sales in this quarter, the first quarter of this year. But whatever we have seen it in the past, like COVID was a disruption and we did hardly any sales in the lockdown period. But in the overall year, we did great sales. So we feel that unlike other industries, if we lose sales in a quarter, it does not matter because the entire pent-up demand or the entire pent-up sales come back whenever you launch the project. It is kind of lumpy. So whenever these projects get launched, and they will be mostly towards the second half of the year. The first half of the year, I do feel that lack of launchable projects, the fresh sales will be a little affected.
Sure, sir. Thank you and all those.
Thank you. The next question is from the line of Yogan Sreswani from Metal Analytics. Please go ahead.
Hi, sir. Thanks for the opportunity and congratulations on a good set of numbers. Sir, just one quick question. Sorry if I missed this in your opening remarks. You joined a bit late. The Eldeco Laksa project wasn't sold a lot till I think last year. However, this year's presentation we see very good sales. So what led to this? And also the agreement which we have, a partnership agreement for 45,000 square feet area in the same project. Could you also just share a bit more details about what exactly this partnership is?
The second question I understood. What's the first question?
I think Eldeco Laksa was a project which was launched a couple of years back. However, we didn't see any much sales from it. While this year itself, a huge chunk of sales has come in. So, what kind of efforts did we put into get such a phenomenal customer feedback and bookings?
So that's a good observation, and I remember I had taken this question a year ago, and somebody was concerned about the slow pace of sales in Laksa. And the reason is it's a little for that micro market position as a luxury project, and the price points are about 15 to 20% higher than what that neighborhood commands. But it was we wanted to go up the value chain, and it is premium stroke luxury. And what has happened, as you would have observed all over the country, in fact all over the world, there is a move towards premium or luxury housing. And as the project progress happened, the structure work is ready, finishing is going on. Somebody mentioned it's going to get ready in 2-3 months' time. We're going to apply for completion certificate. So when the market saw the kind of quality and amenities we were delivering in this project, and also a move towards premium and luxury housing, that's how the market responded. We kept at it, and we've been able to sell good numbers. That's the reason for Laksa. It was slow to start with, but towards the end it picked up, and I'm happy that it's no longer a slow-moving inventory. We are running out of inventory in Laksa as well, and hopefully we should be out of inventory by the time we get completed. That's how we assess any project. If you look at most of our projects, once they're completed, we are hardly left with an inventory. The second question is about the 45,000 square feet or thereabouts we are committed to a partner in Laksa.
Yes.
That's right. Is it about Laksa? Because it's also there in one of our other projects. In one of our forthcoming projects, BH3 Crest also we have to give something to the partner. So in Laksa, it was a kind of a JDA. The land was a JDA, and the 45,000 square feet that has to be is the landowner partner share there. So it's a simple answer there.
Okay. So, sir, in terms of the bookings that we have seen, looks like our entire inventory in Laksa is sold out. How is the situation for the JD partner? I'm asking because typically once two people are selling the same inventory, there's usually a competition in terms of price. So is it because that we had sold at a lesser price than the JD partner? Is that?
No, the JD partners are local landowners who decided to hold on to the inventory and they're going to sell now. So yes, the pressures on a developer and those on a landowning partner are different. So we had to sell because we have to build as well. And as you know that we are a tax-free company, so we depend on advances from customers. We don't borrow from banks and build. So we sold, yes, we did sell at prices which are lower than today, but we have built it without any bank debt. The JD partner, the landowner, did not have a pressure to sell and he's going to sell now.
And what was the average selling price of this inventory, sir?
So it was about 4,500 rupees per foot, if I'm not mistaken, but I'll have to check that, if it's the exact answer.
Yeah. That was really helpful. So thank you and all the best. I'll get back in the queue for any.
Thank you. The next question is from the line of Keshav Garg from CCIPL. Please go ahead.
Sir, just wanted to know your view that for a lay investor who has no knowledge of real estate, what kind of top line revenue growth can shareholders expect for the next 3 to 5 years, broadly speaking?
We should double very soon. Wait, 3 years or 5 years, I don't know. But the first interim target would be to double our top line and bottom line.
That is very heartening to hear, sir. And like you were mentioning that in the first half, the revenue booking is expected to be on the lower side. So, but on the full year basis for FY23, sir, can we hope to exceed the peak revenue of around 170 crore that we achieved in FY17?
I would not like to make that comment at this stage. Because our revenue recognition depends on a number of things. I would request you to wait for a quarter or so for me to answer that question.
Okay, so thank you very much and best of luck.
Thank you.
Thank you. The next question is from the line of Harsh Pedia, an individual investor. Please go ahead.
Hi, congrats for the very good pre-sales number this quarter. I have a question on the gross margins per square feet that the company is doing. For the newer projects where the land has been bought recently, are you guys still maintaining gross margins of 70 to 80%?
Not 70 to 80%, but still very decent margins compared to the industry. We've been able to this 20 acres that we have declared that we bought fresh. It's going to give us very good margin. I think it's going to be as much as 40 to 50%, which by industry standard is very, very high. So please observe that our 20 acres gives us as much profit as somebody else's 60 acres. So it's not 70% by or 60% margin which we have shown recently is by no means sustainable. It cannot be sustainable at all. We are doing it because we have historical land banks and we've been liquidating those. But even I'm happy to report that even the fresh purchase is at a very reasonable price, and that is because of our deep roots and we're so networked into the local market, we were able to acquire that. So we hope to get very good margins even there, but nowhere as high as 60%.
But still, like 40 to 50% gross margins are, like you said, it's.
I hope that we should be able to, land has been acquired at reasonable prices, and with the Eldeco name and the kind of premiumization we are introducing into our projects, we should be able to get more than market prices. We get a premium there. So I think 40%, hopefully 50%, I don't know whether 40, 50, in that range we should be able to get.
Okay. My next question is about the whole process of approval. So once you purchase the land, to getting the final approval to launch the project, how long does this process take?
It used to take as much as a year earlier, year and a half. But now things are generally better in every state of the country. So the local approvals tend to take 3 to 6 months, and then there is one big approval given the size of projects we do, which is the environment clearance. That takes another 3 months. So in all, about it takes 6 to 9 months, generally speaking. Of course, there could be project-specific issues which could delay it further, but 6 to 9 months is a good assumption to take.
So just a follow-up to that would be of the saleable area that you have of 13 lakh square feet, more or less. How much of this do you think would be launched in FY23? Like, do you envisage like most of it would be launched in FY23?
I don't know most of it, but at least half of it. So I hope Imperial Phase 2 will definitely get launched, and one of our group housing projects, either 4 or 5, GH3 or GH4 should get launched. So which is another 3 lakhs. So at least half, and we'll try for more.
So you can maintain the area booked to more than 5 lakh square feet. So it shouldn't go down back to less than 3 lakh square feet here.
That's what I said, that this quarter is going to be very, very critical for us, this and the next quarter. And we hope that we should be able to launch it in the third quarter. So even if we lose some sales in the first couple of quarters, I won't be too bothered, because we tend to see that once we launch a good product, there's so much pent-up demand that it covers up for the time lost. So if we get all the approvals, we should be able to launch them in somewhere in quarter 3.
And I think quarter 3 is also like the most important one because of the festival season. We generally see the seasonality, so probably that would be a good time.
Yeah, quarter 3 and quarter 4 both.
Okay. My last question was on the current management bandwidth. So with the current setup that you guys have, how much do you think can Eldeco grow to in terms of area booked and then area constructed?
We don't have a bandwidth issue right now. I think the current bandwidth or the current management itself it can change by an order of magnitude. I don't know whether it can be twice, thrice. The constraint is the kind of projects we can bring to the market. That's the only. We don't have a financial capital constraint right now. We don't have a demand constraint. We don't have an execution constraint. We don't have management bandwidth constraint. But we do have a launchable project constraint, which we are trying to address.
And most of the construction that happens, is it outsourced or is it done by the company?
No, it is outsourced to local contractors.
So it's definitely scalable then.
Yeah, it's scalable.
That's it from my side. Thanks for taking my questions.
Thank you. The next question is from the line of Arjun Lamba from Guardian Advisors. Please go ahead.
Hi, Pankaj and team. Congrats on a good set of results and even better commentary and good business execution. I think most of my questions have been already asked, but I'll just ask once again. How to, like you discussed about the top line of this company, how do we look at scaling up the top line from that 150, 200 crore bracket to about 350, 400 crores? And look at sort of augmentation in projects. I think we have the runway to growth, we have the capital like you discussed. I think it's now just basically getting these projects in line and executing and delivering. I think that, and I think the management is pretty cognizant about that. Just some thoughts on that, and I think we could probably speed up on this and like Bareilly type, what we did in Bareilly, that's something to explore. New land acquisitions which you are doing. I mean, just a few thoughts and a few questions like I asked, and that's it from my side.
So I agree, Arjun. All the list of things which you need for growth are there, except for a good few launchable projects which we are trying to address. Rest all the stars seem to be aligned. Inflation generally could spoil the party, but that's something that we cannot control. As of now, there seems to be so much pent-up demand for residential real estate that even cost increases are the market is accepting, as I said earlier. Doubling, because our base is small, doubling from here does not look very difficult. We just need to add some projects which hopefully and launch them, which hopefully we should be able to do. If not in 2 quarters and 3 quarters. See, our projects are, the life cycle is 3 to 4 years, 5 years. So it does not 1 quarter here or there does not matter. But generally speaking, we are in a good place. The market is consolidated. The market is giving us premium. And we have waited out for so long. So the runway looks good for us. It should not be very difficult. But at the same time, we have been very careful with the kind of projects we do. We do not like to bet the whole company on one project. We don't like to take wild risks. That's not going to change even if it's a great market and we have capital available. We will be conservative as far as that is concerned. So we are going to tread cautiously, but at the same time take advantage of these favorable winds.
Yeah, I agree with you, Pankaj, on that. I mean, with our governance filters in place. And inflation, I wouldn't be too worried about, because if you see inflation, everything else is inflated much more than real wages. I think next will be real wages that will inflate, and that should probably bode okay for demand from our company's perspective.
I agree.
Perfect. Thanks a lot, guys. Thank you. That's all from my side.
Thank you. The next question is from the line of Aman Shah from GT Investments. Please go ahead.
Hello. Thank you for the opportunity, sir. For all the explanations that you gave, a lot of my answers got captured there, questions got captured there. Just wanted to know, you said material cost has increased because of inflation. Are we now starting to also see inflation on the land prices?
Oh, yes, definitely. And the reason for inflation in land prices is not so much general inflation in the market. It's just that there's so much demand for it suddenly. There's demand for real estate that is getting translated back into demand for land. It's like, just like we are looking for land, so we have to assume that other people are also looking for land. And land prices have also been stagnant for a number of years. They also have to catch up with the lag, and that's what they're doing. So generally speaking, land prices have doubled almost. Raw land prices have doubled almost everywhere.
So will this mean like the cash kitty that we have built so good right now at 130 odd crores, and since last 14, 15 years we have been maintaining a minimum amount of cash. Will it take time for us to deploy this cash again into newer projects?
It's a difficult question. So if we get a good opportunity, we could deploy it overnight. I mean, we're not going to hold back if the opportunity ticks all our boxes in terms of risk, in terms of pricing, in terms of approvability, etc., etc. And if we don't find something there, and something doesn't tick all the boxes, and we will not be under any deployment pressure, and we're going to continue to hold on to it. I know that so it depends on what we get. It's like some other developers have done it, but it's dry powder on a balance sheet. In fact, if an opportunity big enough and comes with justifies that kind of investment, not only would we deploy this cash, it's not our stated policy to remain debt free. If required, we will take debt also. But as of now, we have not found an opportunity where we feel that, let's go all in with that, or, deploy all our cash at one go. So if something does not, we are going to be patient, but if something comes up, we are going to be aggressive as well. So I can't answer that question immediately that, we should be able to deploy the entire cash this year or not. We could deploy it as soon as an opportunity comes, or we could hold on to it.
Is there any minimum benchmark underwriting norms in terms of return on investment that we have?
We look for a project IRR of 20%.
Okay. Great, sir. Thank you and all the best.
Thank you. Ladies and gentlemen, to ask a question, you may press star and 1. The next question is from the line of Agastya Dave from CAO Capital. Please go ahead.
Thank you for allowing the follow-up. So one question that I had was that I remember we took a quantum leap in execution in the scale of the company in 2016. And I think we were, you used to be significantly below 100 crores before that, and we jumped well over 100 crores after that. So that was also the time when the real estate market was pretty, like it was not doing well at all. And we were one of the very few companies which actually could do such a great improvement in scale of the company while maintaining all the matrices that we maintain. Now, again, over the last 5-6 years, you have been consistently delivering a lot of projects. And I think the land bank as such is at the lowest level as a percentage of what you are doing every year. So in this cycle and currently the situation, what prevails in the market, what are you thinking in terms of building up the land bank? Would you be aggressively looking to keep on acquiring, or this is just like whatever you can deliver in the next 2 years, you will just restrict yourself to that, or will you build up a land bank of, let's say, 5-6 years of deliveries?
So,
how are you looking at it, sir?
So let me put it this way. The reason to not go aggressive, and everybody lauds us on having cash on our balance sheet and not having debt.
Yes, sir.
But at the same time, we do not have a huge land bank.
Right.
So the two go hand in hand. If we had land bank, then we won't have a cash on balance sheet, and we would have debt on our balance sheet, because you require capital to create a land bank.
Right.
So when the market was kind of not going anywhere, it was going sideways, it was stagnant, prices were not rising. So we were kind of conservative in terms of taking on debt and deploying the cash. So our average land bank to our annual revenue run rate ratio was, we were probably maintaining 3 years of land bank or 4 years of land bank.
Right.
And now it is probably, because of our increased sales, it has come down to 1.5 to 2 years of land bank. But because the market looks good, we may bring that ratio back to about 3 to 4 years or even 5 years. So to answer that question, it depends. It's not that our strategy is saying the strategy is still the same. It's a question of timing.
Right.
We were holding up to, we were keeping a clean and nice and handsome balance sheet when the going was a little tough. And now that it is looking better, things have turned around for residential real estate, we will look to build our land bank. And for that, as I answered in the previous question, we are looking at the right opportunities. We will not be under pressure. There's no pressure on us to build a land bank for land bank. If it justifies, we'll deploy this money.
Right. So in terms of any other constraints, you went into some detail about how long does it take to get the approvals. But in terms of some other constraint in terms of labor availability, and also there are some people, at least in the NCR region, who are facing severe problems in procuring anything from like basic quarry material to cement, and labor is also a constraint. Are you facing some constraints on that side which may delay certain deliveries?
No, we are not facing any problems there. I think that's purely a question of pricing. It's a demand and supply thing. If there's I don't think as a country we are short of labor. As Arjun said in one of the other questions, that we expect our wage bill to increase, labor prices will increase. If you give good price to labor, they're available. Similarly, we're not facing any material shortage, and all our projects are on schedule for a timely delivery. We're not facing any challenge on the supply side of our projects.
Right. Pankaj, one last question. You mentioned that you were coming up with a property in Rishikesh in some time. Sir, do let us know how to get in touch with your sales team. That is one project I would be interested in for sure.
Absolutely.
Yeah. So give some concession to the shareholders, sir. I've been a shareholder for a long time.
That's a great idea. We should do that.
Thank you very much, sir. I really appreciate your hard work, sir, and the way you run the company is just exemplary. Many people will do well to learn from you. Thank you very much, sir. All the best, sir.
Thank you.
Thank you. The next question is from the line of Yogan Jeswani from Mithil Analytics. Please go ahead.
Hi. Thanks for the follow-up opportunity, sir. A couple of questions on your Imperia project. So, in the pipeline, forthcoming projects, we see there's an Imperia phase 2 as well. So, two questions there. Is phase 2 bigger than phase 1, or phase 1 is the bigger one? And secondly, at what point will we think of launching phase 2? Because if we look at the phase 1 number, I think good 70% is already booked. So by when do we think we will be launching phase 2?
So phase 1 is about 17 acres. Phase 2 is also 17 acres. We are looking to add more land in phase 2, and we want to go all the approvals for phase 2 at one go. So if we wanted, we could have gone for approvals of phase 2, and it's a relatively simple approval there, and launched it, say, in 3-4 months from now. And that would have been that. But we want to add more land. As you know, one of the questions was that you should be adding more projects. We feel that we can add more land. That 17 acres could probably go up to 25 acres. So we're trying to do that so that we can get the entire approval at one go. Whenever we are able to add that land and we get the approvals, I think we should get a great response. To answer your question, we could launch it today or go for approvals today and launch it in Q2. But as of now, we have decided not to do that, and we're trying to add more land there.
Understood. And sir, in terms of the delivery schedule for phase 1, December 24 is something that we have written. Isn't that too near, given it's a township and that typically takes a longer time?
I would like it to happen in December 23, and that's what we are going to target. We have written to it December 24, but as of now, the pace of work at site is looking at December 23. So you should be happy to hear that.
That is amazing. And what is the typical price point at which we are selling here, sir?
About 3,000 or 3,200 rupees a square foot.
Got it. Thank you, sir. I'll get back.
Thank you. Participants who wishes to ask a question may press star and 1. The next question is from the line of Harsh Peria, an individual investor. Please go ahead.
Hi. Thanks for the follow-up opportunity. My question is on the fixed cost structure of the company. So what would that be as a so what would the annualized fixed cost structure of the company be, which would not scale with, let's say, increasing sales?
So I think our fixed cost structure is going to be perfectly in line with the increase in sales. Probably right now our fixed cost structure is quite low, and with increasing sales we will have to increase our fixed cost, and probably right now it's I think 3 or 4% of our sales. Going forward, I expect it to be around 6 to 7% of our sales, and our sales are also going to increase. So I hope that answers your question.
Yes. So the cost structure would kind of increase with sales and would go up from the current level.
It's going to. I feel like it's on the lower side, and we are facing pressure there. So this 4% is also not sustainable. It has to increase. It will go up to. I feel like it's going to go up to 6 to 7%, and sales are also going to increase. So it's going to be, as an absolute number, it could double.
Okay. Thanks for that. And just to follow up on gross margin. So when you were saying 40% kind of gross margins, you meant that the land costs and the construction costs are 60 to 70%. Was that what you were implying, or were you just implying land costs in your gross margin?
No, the former, land and construction.
Okay. Thanks for the clarification. That's it from my side.
Thank you. Ladies and gentlemen, that was the last question for today. I would now like to hand the conference over to the management for closing comments.
Thank you. I'm very happy with the keen interest people have shown, and I hope they continue to support us like this. So thanks a lot, gentlemen, and we'll see you back in 3 months' time.
Thank you. On behalf of Eldeco Housing and Industries Limited, that concludes this conference. Thank you for joining us, and you may now